The rand has been weakening, and we're sitting at 7.13 to the US dollar. And news out, and a lot of traders saying that this is exactly what is happening. Reserves are starting to be accumulated by the Reserve Bank, and it's being reflected in the rand.
Yes, I think the Reserve Bank and exporters may be trying to, get some relief there and trying to weaken that rand a little bit. And I think also some risk aversion has really come into the market. As you mentioned earlier, after what happened in Asia this morning, we've seen some risk aversion. We've seen that also translated into the equities as well as the commodities side of things. So yes, some risk aversion as well as the accumulation of reserves there affecting the rand.
Well, Ntombenhle, I mean, at the end of the day, we're also waiting for the fourth quarter GDP number out of the US. It is expected that it could hit around 3.5%. I also mentioned that, keeping in mind that we had really bad weather, a lot of concerns about how the retailers performed and how that will affect overall growth. And one only has to look over to the UK to notice that the weather can have quite a detrimental impact on overall growth as well.
Yes, consumers account for about 70% of the United States GDP, so that figure is quite important, and it's a huge jump, I must say, from 2.6 the last time to an expectation of 3.5% today, this afternoon. So, that will definitely be telling of the market. I think there's lots of cautious trading right now as we anticipate that number. When that number comes out, I think there'll be major reactions, and would also set the mood for Monday when our markets open. But, it is a big figure, and, considering that the UK also failed to meet expectations, I think it will be very critical and will set the tone for late afternoon trading.
In the meantime, miners coming under pressure. It seems that most are waiting to hear some news in terms of what the US GDP number could spell for demand for raw materials as well. The gold price, it seems that we're starting to see a bit of strength coming through on the commodity front, which is quite fascinating because it has been quite volatile throughout the day in Ntombenhle. Gold miners in South Africa taking quite a big knock, down around 1.8% right now.
Yeah, I think, if we take the whole week into perspective, the gold price has not really performed very well. I think we've also seen it from our markets that there's been a bit of rotation going on from developing markets, money flowing in there back towards developed markets and going more towards their risky assets rather than assets like gold. But I think there was a report that came out earlier today that said that China will perhaps be increasing their gold buying by about 15%. And that will help as an inflation hedge and also as an alternative investment. So perhaps there will be a much better comeback from the gold prices where it's currently sitting. It has certainly recovered somewhat, but not near its all-time highs.
Let's touch on some interesting moves in today's session with Kumba Iron Ore in particular. Of course, a lot of news coming through for this stock, and it seems that government is saying that Kumba Iron Ore needs to start engaging in negotiations with Imperial Crown Trading to set up a mining and a supply arrangement similar to what we saw between ArcelorMittal and Kumba Iron Ore. It's been one of those interesting stories over the past while in Ntombenhle. It remains to be seen how it's going to end up. But when you look at the underlying fundamental factors, iron ore demand is very strong. So perhaps a good thing for Kumba going forward.
Yes, Exxaro and Kumba are definitely going to be benefiting from higher iron ore and coal prices, and with the flooding in Australia, I think that's going to work towards their benefit. But this mining rights issue has become quite controversial, and I think there's a lot more that is still going to be coming out. And for the stock specifically, I think the market just needs some more clarity and needs for this issue to actually come to a head and come to an end also. And I think so there will be a lot of cautious trading for that stock, regardless of the fact that they're going to be benefiting from better iron ore prices. But I think, going forward, what the market really wants to see is that the government will be fair, and that, with what's happened with Imperial Crown Trading, and what the market wants to see there is that there'll be kind of an amicable solution to the problem. Otherwise, it will affect Kumba Iron Ore stock prices.
And what about the likes of ArcelorMittal? Because this stock has also been battered on the back of the troubles that it's experiencing with rights issues with Kumba Iron Ore as well. Between the two, I mean, which company would you be going for right now, if at all?
Sure. I mean, with Arcelor, there's also the BE transaction that puts a spanner in the works there. It's not clear right now as to what will happen. There's still a lot of government interference there. There's still a lot of legal battles going on both sides of those companies. So right now, I think, perhaps with the iron ore prices, price increase and coal increases, I think that, perhaps Kumba may weather it a bit better. But, it's very difficult at this point to say.
And Ntombenhle, a short while ago, we had Murray and Roberts releasing trading updates, and it says that first half loss is going to affect the company, so it's going to swing into a first half loss, and it seems that's on the back of charges against some Middle East and local contracts. This isn't the first worries that we hear from the construction industry. This has been an ongoing thing. The company says that it expects headline earnings to be between 35% and 45% lower compared to the prior year. Overall, when you look at the construction space, some say, well, this is a good time to buy now that it is a down and out, or would you perhaps wait until we see some positive news in terms of pipeline projects?
I think, it definitely is a wait-and-see game for me as far as the construction industry is concerned. I mean, with the world recovery almost faltering and, there's a stop-and-start kind of situation, it's not really clear whether, these construction companies are just so dependent on the world recovery and so dependent on companies being profitable and also the homes being profitable. So it becomes a little bit difficult there to say. But I think right now with the construction sector, what we're seeing is expected. They are struggling at the moment, and going forward, I think right now should be a wait-and-see game.
Ntombenhle, overall, looking into next week, as I mentioned, World Economic Forum underway. We've got the US GDP number. We've got a lot of concerns about a downgrade of rating, even for the US when it comes to its debt scenario that is playing out as well. What is going to drive markets going into next week? It seems that everyone is taking it on a week-by-week basis because there's just so much volatility that is driving the markets.
Yeah, absolutely. I mean, we're also approaching the end of the earnings seasons in the United States, so the focus will really be more onto economic data. And, with Davos coming to an end, I believe on Monday it's coming to an end, it will be interesting to see what resolutions there are, if any. There's a lot of debate right now between international banks as well as heads of state, a certain blame game going on there. But, it seems that a US document came out yesterday blaming everybody, all sectors, involved in the world being in the state it is in right now. But also, I think for South Africa, what's important is that the whole debate about it joining BRIC and, and the implications for the South African economy and the psychological implications that will come to the fore.